Welcome to another income lesson. This one covers capital gains capital gains or loss, unemployment, and then other income. Hi there, it's me again. Today I'll be addressing Form 1040, Schedule 1, finishing up where we left off the last time. First, let's take a gander at some of the areas will be addressed from the Form 13614C, the intake sheet. Line 9, income from the sale of stocks or other bonds. And then our source documents are going to be Form 1099-S or Form 1099-B. I will not be addressing the Form 1099-S as it deals with real estate, and that is out of scope for our VITA program. But notice line 12, unemployment compensation. Source document is our Form 1099-G. And then finally, line 15, other income, which is all other income not exempt by the law, but does not have their own dedicated line on the Form 1040. Now, let's just take a look at our 1040, line 6 is where the Schedule 1, additional income and adjustments to income schedule. Line 13 is the capital gains and losses. That's where we'll be focusing on. Once again, this slide is a draft version. The final was not available at the time of creation. Taxpayers who own stock or bond assets and later sell them will incur a taxable transaction, albeit a gain from the sale or a loss from the sale. In most cases, a taxpayer must use the Form 8949 and the Schedule D to report the capital gains and losses on the sale of an asset. Generally, when the taxpayer sells the assets, the security brokerage or broker will send the taxpayer this form, the 1099-B, or a facsimile describing the sale. You will notice box 1A, description of the property. In the example, it says 100 shares of XYZ company. Box 1B shows the date the taxpayer acquired the asset, and 1C shows the date the asset was sold. Box 1E shows the taxpayer's cost of the asset. Box 2 refers to the holding period and identifies whether the gain or loss is short or long term. Short means the taxpayer held the asset for 12 months or less. Long means that the taxpayer held the asset for more than 12 months. Box 3 indicates the taxpayer's basis or cost of the asset and whether or not it was reported to the IRS. Of course, box 4 is the federal income tax withheld box, so you always want to pay attention there. I've only pointed out a few of the critical boxes from the Form 1099-B. However, I have consistently advised you to make sure when inputting into TaxSlayer, you input all of the information from the source document. Inputting all the information correctly into the software ensures that the taxpayer's return will be complete and accurate. Allow me to throw you another little curveball. Sometimes the taxpayer will have a number of assets or asset transactions, as well as some possible dividends and interest income from the same security a brokerage firm. If that happens, the firm may issue the taxpayer a facsimile or an 8.5 by 11 sheet of paper accounting for all of the income items and describing the transactions instead of issuing individual forms 1099. Don't be alarmed. The inputting into the software does not change. Publication 4012, pages D20 through D23, provides a lot of screenshots for entering the capital gains and losses. Additionally, publication 4491 provides extensive descriptions regarding this subject. Now, moving on to the unemployment compensation. This is an easy segment. Unemployment compensation generally includes any amounts received under an unemployment compensation law of the United States or of a state in the United States. In most cases, unemployment is fully taxable. After the unemployment figures are entered into the TaxSlayer software, the total is then transferred to the Form 1040, Schedule 1, line 19. The amount of the withholding from the Form 1099-G, Box 4, should be entered into the software for accumulation with other federal income taxes withheld amounts in the payment section. You will notice on the slide, we have a picture of the 1099-G with some arrowed items, as well as a copy of the Schedule 1 additional income section. As forestated, all income is taxable unless exempt by the federal tax law. Line 21 of Schedule 1 captures taxable income not reportable elsewhere on the tax returns. These could include gambling winnings, which are fully taxable. Losses from gamblings are deductible on Schedule A as an itemized deduction item, only up to the amount of the winnings reported. You may get that question quite often in the state. Also, line 21 includes cancellation of credit card debt. That debt becomes taxable income to the taxpayer. That is the cancellation of a credit card debt. Jury duty pay is also taxable income and needs to be included in the other income line. However, if that jury duty pay is turned in to the employer, the taxpayer is entitled to an adjustment or a deduction of that jury duty pay as an adjustment or a deduction of income. TaxSlayer software will have a screen for the tax preparer to list the other income items as well as the amount. Now, all the additional income amounts from lines 1 through 21 on the Schedule 1 are combined and then entered on the Form 1040, line 6. Okay, so now we're done with all the income items, those that are listed on the face of the 1040 as well as those that are listed on the Schedule 1. We are now down to line 6, total income. This figure represents total income without any adjustments or deductions. Well, I'll stop right there and we'll pick up with line 7 on our next segment. Take care, everybody. See you later.